We've completed our journal entries, which I have listed on the left-hand side here. Next, we're going to take our journal entries and we're going to move those balances into T accounts. A T account is named such because it's shaped like a T, and each account will have its own T. By taking our journal entries and moving them into T accounts, it allows us to see, as of the end of the period, how much we have in each account or what the ending balance is in each account. For example, if you were to look at all of our journal entries and I said how much is in cash, you'd have to pull out your calculator and find there's cash, there's cash, there's cash. But once we put it in a T account, you'll just be able to look and see real quick. So these are very useful. All right, so let's get started. So we're going to start with transaction number 1. Actually, before we do that, you'll notice each T has a debit side and a credit side. Debit's on the left, credit's on the right. When we move the balances over, we're going to make sure we put them not only in the correct account, but on the correct side, either the debit side if we debited that account in our journal entry, or on the credit side if we credited that account in our journal entry. Okay, now ready to go. Transaction number 1, we debited cash for 100,000. So I'm going to start by writing transaction number 1 here so I can always go back and check and make sure I have everything. There we go. We also increased stock with a credit. Okay, so now we've entered transaction 1. Transaction 2, we debited inventory for 10,000. So I'm going to put transaction 2 and then enter 10,000 on the debit side. We credited cash for 10,000. So I'm going to put transaction 2 and I'm going to put 10,000 on the credit side of the cash T account. Transaction number 3, we bought equipment for 60,000 cash. We debited equipment for 60,000. So transaction 3, I'm going to put 60,000 on the debit side of the equipment T account. And I'm going to put 60,000 on the credit side of my cash T account. Oops. There we go. Transaction 4, I'm going to debit inventory for 20,000. So I'm going to put transaction 4 and put 20,000 on my debit side. And I credited accounts payable for 20,000. So I'm going to put transaction 4 and put $20,000 under the credit side of my accounts payable T account. Transaction number 5, we debited accounts receivable for 30,000. And we credited revenue for 30,000. Transaction 6, we debited payroll expense. I'm just going to put all my expenses in one T account for now. We'll split them out later, but for this first section, up until the first exam, we're going to go ahead and just keep them together. All right, so transaction 6, I have expense of $5,000, and I paid cash, so I'm going to put $5,000 on the credit side of cash. Let me see, transaction 7, we paid rent expense, so I'm going to put the $2,000 under expense, debiting expense, and I'm going to put $2,000 on the credit side of cash. All right, let me see. Transaction number 8, we debited, we debited accounts receivable and credited revenue for 40,000. So we're going to debit accounts receivable for 40,000. And under revenue, I'm going to put 40,000 on the credit side. All right. Transaction number 9, we debited equipment for 250,000. So 9, I'm going to put 250 under the debit side, and then we credited accounts receivable for 250,000. So I'm going to put 250,000 on the credit side. Transaction number 10, we debited expense for 1,000. And we also credited accounts payable. So I'm going to put 1,000 on the credit side of accounts payable. All right, we're doing good. Just 2 left. In 11, we debited cash, 30,000, and credited accounts receivable, 30,000. So for transaction 11, I am going to put 30,000 on the debit side of cash, and I am going to put 30,000 on the credit side of accounts receivable. All right, and let me see. Transaction number 12, we paid a dividend equal to 1/2 of net income. So we debited dividends and credited cash for 31,000. So transaction 12, I am going to put 31,000 under the debit side. And I'm out of room here, so I'm just going to add 2 cells, insert cells, shift down. Okay, I think that'll be all right. And I'm just going to put the 30,000 back up here on transaction 11. And then on transaction 12, I'm going to put $31,000 on the credit side. And I already did the dividend side. Okay, we have now entered all of our transactions, all 12 of them, into our T accounts. But we're not done. The next thing we need to do is we need to add up our T accounts. And when we put the ending balance, if we end up with a debit balance, we need to put it on the debit side. If we end up with a credit balance, we need to put it on the credit side. It's really important to get that right. If you put it in the middle to hedge your bets, I won't know what you're trying to indicate, and that will be incorrect. All right, so since cash is a debit account, we're going to add up the debits and subtract the credits. And let me see. We've got 130,000 on the right, and I'm just going to do a formula to add up everything on the left and subtract everything on the right. And we end up with a debit balance in cash of 22,000. Okay, I'm going to go over to accounts receivable. 70,000 minus 30,000 gives us a $40,000 debit balance. Inventory, 1,000 plus 20,000 has a $30,000 debit balance. Equipment has a $310,000 debit balance. Accounts payable doesn't actually have any debits. This is going to have a $271,000 credit balance. Stock will have a $100,000 credit balance. Dividends, oh, look at that, I've got my line on the wrong side, is going to have a $31,000 debit balance. Revenue will have a $70,000 credit balance, and expenses will have an $8,000 debit balance. All right, once we have them all added up, then we are ready to go on to the next step. So in the next video, I will show you how to take your T accounts and transfer them to your trial balance.